and gold reacted with a $100 drop. And, I think the drop was overdone. Number one, I think part of it is still the euphoria regarding the Trump trade and the strengthening dollar, which I'm going to get to momentarily. But a lot of people still think that the reason that the price of gold was going up was because of these geopolitical risks out there, and the fact that there's been a de-escalation of the tension in the Middle East, that's a negative for gold. But I don't think that that's the story of the gold rally. Gold didn't get near 2,800 because of what's going on in the Middle East.
In today's news recap, silver gains as investors continued to assess the latest economic data. Silver prices gained 0.42%, bolstered by expectations of a Federal Reserve rate cut in December. Core PCE prices in October remained aligned with market expectations, maintaining hopes for a 25 basis points rate cut, which supports silver by reducing the opportunity cost of holding non-interest-bearing assets. Meanwhile, robust Q3 GDP growth, strong personal income and spending data, and historically low unemployment claims highlighted the resilience of the U.S. economy. Initial jobless claims remained steady at 213,000 for the week ending November 23rd, below market expectations, reinforcing the strength of the labor market. Globally, silver faces its fourth consecutive year of structural deficit, with a 4% decline expected in 2024, bringing the deficit to 182 million ounces. Despite a 1% increase in supply from key producers like Mexico, Chile, and the U.S., record industrial demand, recovery in jewelry consumption, and higher recycling will continue to strain availability. India's silver imports surged nearly tenfold to 4,554 metric tons in the first half of 2024, driven by solar panel and electronics demand, as well as investors seeking better returns compared to gold. Silver is showing signs of fresh buying, with open interest increasing by 11.4% to 25,927 contracts. Prices are finding support. On the upside, resistance is pegged, and a move above could see prices testing higher highs. Now we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
Okay, well, the week got off to a bad start for the gold market, but maybe a good start for the global, not economy, but just for the people, because I think the catalyst for the about $100 sell-off in the price of gold on Monday was the ceasefire agreement between Israel and Lebanon. And that's good news. I mean, I'm happy to see that. We'll see where that goes. And gold reacted with a $100 drop. And, I think the drop was overdone. Number one, I think part of it is still the euphoria regarding the Trump trade and the strengthening dollar, which I'm going to get to momentarily. But a lot of people still think that the reason that the price of gold was going up was because of these geopolitical risks out there, and the fact that there's been a de-escalation of the tension in the Middle East, that's a negative for gold. But, I don't think that that's the story of the gold rally. Gold didn't get near 2,800 because of what's going on in the Middle East. I mean, those events didn't hurt the price of gold, but I think the main reason gold's going up is a debt story, an inflation story, a de-dollarization story. And I don't think those threats have de-escalated at all. I mean, despite the fact that, people are talking about the change with the Trump administration, the fundamentals, big picture fundamentals, remain the same. All I think we're doing is rearranging the deck chairs on the Titanic, right? It's not going to stop the ship from sinking, but it may result in some people thinking that that's going to be the case. So meanwhile, gold fell off. It still managed to hold about $2,600. It's recovered some of those losses over the past 2 days, Tuesday and Wednesday. We're trading right now. This is Wednesday, about 4:30 New York time. Gold's around $2,636 an ounce. So it's recovered maybe $20, $25 from that near $100 decline. Silver also got walloped on Monday, and it was down again today. Even though gold was up, silver was down. Silver is getting very close to that $30 support. It's right around $30.10 right now. I still think that that's going to hold the support. Doesn't mean it can't trade below it a bit, but I think that they will be buying those dips below $30. The other thing that's been weighing on the metals has been the strength of the dollar. The dollar has been strong. I think the euro might have even gotten below 104 briefly. 104 was about the low. I've seen it turn. I'm here at St. Bart's, everything is in euros and stuff is expensive enough as it is. So the euro being down a little bit has helped out, although I did notice that the euro was up almost 1% today. So we finally got a little bit of selling in the dollar today. So the dollar index is off of its highs. That hasn't really helped gold that much. Dollar index is now 106, just barely above 106. We got above 107, I think, on the dollar index. By the way, so I don't forget, the Dow Jones hit a new record high today, crossing 45,000 for the first time ever. It didn't hold that level. In fact, it actually closed down 138 points on the day. The Dow was the only index that made a new high today, and they all closed the day lower. But they've been moving up, on the optimism surrounding Trump. And part of the optimism surrounding the dollar has to do with tariffs. And in fact, during the week, Trump did come out and reiterate his commitment to tariffs, particularly on Mexico, Canada, and China. And that announcement really sparked a big drop in the Canadian dollar that day. I think the Canadian dollar is down over 1%. Mexican peso also got hammered even more than that. Everybody is focusing on the impact that tariffs will have on the nations that we're trading with. And they overlook the impact that tariffs are going to have on Americans. Because tariffs always hurt the most the nations that impose them. I put out a post on X that a trade war is lost by the nation that wages it. And that's what's going to happen. I mean, people just think that the tariffs are gonna help. Now, if the government needs to raise revenue, I mean, tariffs are not the worst way to do it. I mean, they're better than an income tax, but it's still a burden on society, right? It's not like the taxes don't have a cost, and tariffs are taxes. I mean, they almost sound like the same word, right? They both start with a T, but a tariff is a tax, and it's not a tax on China. It's not a tax on Canada. Canada doesn't pay taxes. I mean, Canada is just a sovereign nation, but Canada's not paying.
In today's news recap, is now a good time to invest in silver? Investing in silver is a riskier play compared to gold, but there are reasons to believe that it could be a good time to buy the devil's metal. Alongside bonds, one way of diversifying a portfolio away from equities is through commodities. Gold has enjoyed a strong year, but there are reasons why now could be a good time to invest in silver. Silver prices have increased slightly over 19.9% in dollar terms over the past 12 months and 20.3% in sterling terms. Silver lags gold during this period, but given that gold and silver prices have historically been compared in order to assess the investment appeal of either, this arguably strengthens the case for investing in silver. Since hitting a peak in late October, silver prices have fallen approximately 10.4% in dollar terms and 8.2% in sterling over the past month. This could present a buying opportunity, but there are several factors to consider when deciding whether or not to invest in silver. The investment case for silver is distinct from gold. While it is similarly a precious metal with a rich history of usage in coinage, in the modern era, it is silver's industrial qualities that have the greatest bearing on its price. 55% of annual demand for silver comes from industry or tech, compared to less than 10% for gold. Adrian Ash, director of research at Bullion Vault, tells MoneyWeek, "Look around you. If something's got an on-off switch, it most likely contains silver." Other industrial use cases include brazing and alloys, the chemicals industry, and medical equipment. The latter benefiting from the fact that bacteria cannot grow on silver, an inert noble metal. For these reasons, silver sometimes tracks action in copper prices more than the safe haven precious metal. All of that said, many of the same drivers that impact the gold price, financial stress, interest rates, inflation expectations, and policy decisions, also apply to silver. Indeed, you can think of silver as gold on crack, says Ash. More irrational, more volatile, more dangerous, but also more fun if you're looking for risk. Now we'll show you more clips, but first, check our Black Friday deal in the pinned comment. If you're a stacker, make sure you're keeping all your data private and that you're browsing investing-related stuff in a safe manner. With NordVPN, you'll be sure that your privacy is never exposed. Take advantage of the limited time offer now, and let's get back into the episode.
The real harm is in the United States, because you have these American citizens who were buying these Canadian products because they obviously wanted them, they valued them, and now they can't afford them anymore, so they don't have them. Now, either they're going to buy an American product that's more expensive, or a product made in another country if there's not tariffs there. But it's a loss for that American, because now something that he used to buy is more expensive, or he doesn't buy it at all. He has to do without it because he can't afford it anymore. So there is a real cost here. But what I wanted to talk about at the moment is the idea that these tariffs are good for the dollar, because that's really what's been driving the dollar. I mean, not so much that the economy is going to be stronger under Trump than it was going to be under Biden, although that may be part of it. But most of what I read to explain the dollar's strength comes from the tariffs. And so there are two arguments as to why people believe tariffs are good for the dollar. So one is that they're going to reduce the trade deficit, right? By making imports less expensive or more expensive, Americans will import fewer goods, and more domestic goods will be consumed instead. And so we're going to run a lower trade deficit as a result of the tariffs, and that will put fewer dollars into global circulation, and a lower trade deficit should be beneficial for the dollar, right? A big trade deficit should hurt the dollar, a smaller trade deficit should help the dollar. So the first part is the impact on our trade deficits, or balance of trade. The second argument that I read about why tariffs are going to be good for the dollar is that they're inflationary, right? Because tariffs will raise prices, and the Fed is going to respond to those tariffs by not cutting as many times as the markets had expected, or maybe even not cutting at all, or heaven forbid, maybe they hike, right, because of the inflationary impact of the tariffs. And so the tariffs are going to lead to a tighter Fed than would otherwise have been the case without the tariffs had Kamala won. And so it's that tighter monetary policy that is going to help the dollar. And also, I guess, on the impact of the tariffs, if people think that the tariffs hurt the countries that we trade with and not America. I mean, I hear that all the time, that, oh, America, we're the most important market, like Canada, most of Canada's exports go to America. And so they're really going to suffer from these tariffs. And the idea is that the global economy is going to suffer because it can't export as much to America. And therefore, the rest of the world is going to have a weaker economy as a result of our tariffs. and we're going to have a stronger economy. Right? All three of these things, that tariffs will reduce the trade deficit, strengthen our economy, and weaken the global economy, and lead to a tighter Fed. They're all three wrong, right? The markets are wrong. They're 0 for 3 on their economic reasoning. But that doesn't matter, because if that's what the traders think, if that is the conventional wisdom, then that's what's driving the movement in the exchange rates right now. So it's not that tariffs are actually going to help the dollar go up. What's helping the dollar go up is the belief that tariffs are going to be good for the dollar, because we don't even have the new tariffs yet. We got the old tariffs, and I'm going to talk about that. But the markets are completely wrong in their view. And so what that means is at some point, maybe once the tariffs are enacted and the expected effect does not materialize, there will be a substantial reversal in the dollar's fortune. And all the traders who bought the dollar on the expectation that tariffs would be good for the dollar will end up selling dollars when they realize it's the reverse.
What do you think about Peter Schiff's insights in this episode? His bullish outlook on gold amidst the pullback, his skepticism about Bitcoin's sustainability, and his sharp critique of tariffs and their damaging impact on the U.S. economy offer plenty to think about. Do you agree with his assessment of the dollar and the economy's trajectory under these policies? Let us know your thoughts in the comments below. Don't forget to like, share, and subscribe for more financial insights. Now check this video right here because it's a perfect fit for you. I'll see you on the other side.